Hey everybody, this is DayTraderRockStar and this is the market radar for the week of June 29th. June 29th. I was off, pretty much out of the markets all day yesterday and half of the day Thursday. But Wednesday night I was able to put out a market radar video and we're discussing some of the technical and some of the patterns playing out in this market, knowing the big issue was Greece overhanging this market. There's continued disappointment coming out of Greece. And today's Saturday. I'm here back in the office Saturday doing the market radar and updating the HPS watch list. And as I speak, there's two big news events that will affect the market when the futures open up on Sunday. So we're going to kick off those two events. Again, as you know, they're going back and forth here on Greece. And Greece has recently asked for an extension, bailout extension. All right. So this just came out today. Eurozone financial administrators have rejected a Greek request to extend the bailout program beyond June 30th. June 30th will be the last day of June. That's Tuesday, and from that point on, who knows what's going to happen. But it is affecting the markets. In my opinion, that the market does get affected by this situation. There's just so many eyeballs on it. It's in the news. It's one of these situations we've been through before with a debt ceiling countdown, and then we had all these other things. It always goes to 11th hour. And these 11th hour countdowns, it's frustrating for a trader because, you get into some good positions, and yet the market, gets hit with this news and really gets, looking back at it, you have to be just conscious of this news and understand that normal, market technicals will not work as well because of news events and stuff. In this case, let's just go back here. Like I said, Wednesday when I put out this, when we put out the market radar video, we had this going into Thursday and Friday. We had this rising wedge pattern. We're very cautious going into Thursday and Friday because of the wedge pattern. Now the 60-minute time frame and the daily were also overbought, so there was a lot of indications that we were going to roll over at this point. We had the top part of that trend line. We started rolling over, and you can see we broke through here. Then we got oversold, and lots of times when you get oversold in the 60, you can get a little bounce, and we started to get a little bounce, and then again, if that bank bounce fails, which it does sometimes, that's giving you an indication there's a lot more weakness coming in here. So we did follow through, and what happened was we came all the way down to our projected measured move area out of a pattern like this. Now this is a rising wedge pattern, and then there's two ways of determining your measured move. A measured move is when you have a pattern, how far does the stock move outside that pattern if it breaks out of that pattern. With a wedge pattern, usually, I guess the standard book definition would be you take the width of the wedge and, you extend that out to a parallel channel. And it's the same way I do it. I do a 1, 2, 3 pattern measurement. So we have 1, 2, 3. Well, I have 3 right here. And what I do is I take that parallel line and I put it down to the third pivot. It gives you the same results. It's a beautiful way of trading. I use it, I teach it, and I believe in it, and that's why we see it so often. This is actually 2 HPS setups, and the high probability setups are based off of the the setups that happen over and over in the markets, and I detailed those out in the members forum area. And this one is, of course, 2 of them. We have this channel breakout stochastic rotation, which is a channel breakout, and you wait for that first stochastic rotation back down. In this case, you're also looking at trend line rotation, and in this case, you also have a 1, 2, 3 pattern. Remember that 1 pivot here, 2 pivot here, 3 pivot here. So once you have that lone pivot down here, parallel trend line, so this becomes an X marks the spot, which is on the HPS zone. And again, each one of these setups have their own strategy. You can find those on the forum. And it talks about how to trade them, what to look for. But this is exactly what you're looking for. The only bad part of this is that the 60-minute did get oversold. It did come down to this level. It did chop around here a little, which lots of times you want to see a good, fast reaction back up. In this case, again, there was some. I think there's issues out there that's affecting the markets in a bit. But the truth is also this is a very pretty chart. It's a very nice looking chart. It acted perfectly. I mean, to see this move back up would be just perfect. The big weighing factor is Greece. So we have to just let that play out. I think if Greece, and I'll give you my personal opinion of how this might play out. I've seen these events happen. We talk about the 11th hour type of thing, and it just drags on the market. But Greece has been in the public eye for such a long time now, and people are basically sick of it. And you might be in the camp that you're saying, well, Greece is so small, it's not really going to affect anything if they leave the euro. That's the kind of camp I'm in. But there's also the camp of talking about contagion and this opening up the floodgates for other people taking a way out. I don't see defaulting as a way out. I think this is a big negative for Greece. So the truth is, I do feel like this will get resolved one way or another. But because of, when it gets resolved, 11th hour, 13th hour, who cares when it does, even after the fact? The market will be so sick of it anyway that we might get a nice little pop, but I would probably use that. I'm banking on that pop to, get some good profits in the market. I would love to be able to take a lot of things off into that because it just seems like that was a big focus of the market. The market's been extended up here on the daily for a while, and there's a lot of people out there calling for a correction, and has not corrected. So, it doesn't seem like it would, Greece would have given us that opportunity. Just the market pricing in a failure of this whole thing to resolve or this Greek exit, you would already have this, in my opinion, kind of factored in. It seems to be holding very strong. It seems to be very technically holding up pretty good. We had this nice channel breakout. We did break down, pulled back. We're going to see if we actually push back up here, curl back up. That would be very bullish. Or do we rotate back down on the daily? And that could bring us back down here quite a bit, even back down to the 200-period moving average. So it still hangs kind of in limbo there. The daily's negative, the 60 minutes positive. The market continues to show strength, but there's news overhanging. The second part of the news of the, first of all, we had, again, Greek Prime Minister called a surprise referendum for July 5th over the terms of any new deal. Greece has to pay that 1.6 billion euro to the IMF on Tuesday. Without new funds, there's fears that Greece may leave the euro and its economy may collapse. Now, there's going to be a lot of people again talking about a run on banks. Banks won't open. You're going to get a lot of news out there, a lot of rumors. So the next couple of days, very volatile on the 5-minute, probably on the 1 minute. Just be careful out there. Once we get this out of the way and we get back into a kind of rhythm of the markets, things will start really working. We have to understand that this is a tougher time to trade. And I wish, I got into a couple setups this past week, and not working at the Sam Adams. And I'm disappointed, Yet I also know that, in the big scheme of things, we're looking at a level of interest down here, and it's so hard when you have that news overhanging that you push sometimes beyond those levels. Now, there is actually a trend line under here that we could easily come down to, but, I always find it hardest when there's news outside there and you're trying to take a new channel. Normally, these channels and flags work well. When there's news out there, we could always look back and say, well, why did this drop out? Why did a lot of charts drop out? Oh, yeah, that's right. That was the Greece collapse, 2 days before, there was some news out there, so that you could always look back at these pattern breakdowns and usually see something underlying in the market that caused it. Just one of those things. And then you have other stocks that, continue to work well in their patterns. This one looks really great for next week. The Fastenal, actually, the daily here came back pretty strong. It looks like just a nice little flag, and we're going to flag out and push higher. But again, we're kind of extended. So we have some mixed signals. A lot of people are looking at, the market get a reaction. And then, again, I don't want to forget the other news, because they're going to continue with this Greek. And by the time this goes out, by the time Monday comes, they might have had some emergency meeting again, and whatever. But if this doesn't work out, we're going to have to deal with that volatility in the market. So the other thing was China cut rates again. China today. Let me just bring this page up here for a second. All right. Acting a day after the Shanghai and Shenzhen stock market plunged more than 7%, Chinese central bank cut interest rates on Saturday and reduced the reserve that certain banks must hold. The two measures send a signal that the government may not be eager to see an abrupt end to a stock market rally that's seen the price more than double in the last 12 months. The rally has been underpinned by speculative trading, heavily financed with borrowed money. Young, often poorly educated investors have been betting on further appreciation, even as business managers with more information on the true health of their companies have reported been selling heavily. So again, another situation where we're going to have this news event. Normally, a cut in interest rates out of China is positive for China's market and stuff, and that's typically seen in our futures also. Now they've done this. It'll be the fourth time they've done it in the last year. The first time they did it, I think, maybe the second time. I'm trying to read back some of the stats and trying to kind of cross-reference when China cut its rates, what did the market actually do? I have one here. It says Chinese market jumped on opening. Chinese market jumped on opening Monday morning after the weekend cut in interest rates, the second in 3 months. So the second one in 3 months, in a bid to help prop up the slow economy. But then it goes back here. The Shanghai Composite jumped 0.7%. So that's not jumping too much. 0.7%. It's under a percent. It dropped 7%. It dropped 7% on Friday. So, I'm not expecting a big pop out of these interest rates. Maybe we get a little pop in the futures, come Sunday night. And I think we're going to see, the combination of Greek news, and we're going to see the combination of, the Chinese rate cut, go back and forth. But I think the Chinese rate cut is, again, not going to be it's not going to be that effective against a 7% drop. I mean, it seems like the market actually could just laugh at that and continue to move lower. So I don't think that's going to be a big positive. And then of course Greece. So futures maybe Sunday. I'm very curious. I'm going to be watching them with you at 6 o'clock here at Day Trading Radio. So let's look at the technicals. Again, 60-minute time frame is oversold. That rotation back up would be great, but the daily is against us as it started to turn back down. We have two intersecting things. Normally you get that 60-minute rotation back up, and then the follow through to the downside lets us fully recover. But news will be an event. There's not much else we could do until we get past Tuesday because technicals will not play out in this environment if we have something that really starts to move this market, outside the normal pattern. So that's it. I mean, there's not much more. I mean, you have to just be part of this market on the next 2 days and see how it plays out. All right, let's just see how everything plays out. I'm going to try to do the best coverage I can this early next week. Maybe do some later days, depending on how, if there's any news that goes into the late hours and stuff. If there's any 11th-hour meetings and stuff, we need to cover it. We will. All right. So that's the end of the market radar. I wish I could give you a little bit more, but I want to get to Tuesday. Next part of the video is just an update on the HPS. Again, with the same thing with the HPS, but I want to update you that on and right after this. If you don't get the HPS, then definitely consider getting a membership at Day Trading Radio. It has great, basically we outline all the stocks we're going to be trading, why, all the education, all the playbook views, all the playbook trade setups, everything you need to be a member, plus the the commercial-free radio, the live stream, high definition, everything else. All right. Well, I'll see you guys Monday or Sunday even, maybe even Sunday evening. Don't forget, futures will be on Sunday evening here at Day Trading Radio. Tune in, check it out. I'll see you then.